Well, Tesla is reporting a second consecutive quarterly profit for the first time ever. And CEO Elon Musk thinks Tesla can keep it going. Still, take a look here. Shares of Tesla falling about 5% in extended trading. Let's bring in Nathan Bami, USA Today business reporter, to talk about all of this. And Nathan, thanks for joining us. I'm really curious why shares of Tesla are down about 5% when, they're reporting profit and say they can continue that streak.
Well, it's always hard to know for sure, but at the end of the conference call last night, they made a big surprise by announcing that the CFO was retiring for a second time. He had come back to the company at one point to help Elon Musk straighten things out. Well, he's gone again, and I think that surprised investors who want to see stability at this company.
Let's talk more about the profitability for a second, Nathan. Musk's goal, obviously, is to report a profit every quarter for 2019. But I'm questioning how they can do that. You talked about that executive leaving, and we know about 7% of its workforce getting let go. That comes with an upfront cost. And they also want to sell the Model 3 for $35,000, much cheaper than it sells for now. So that would cut into profitability.
Yeah, this is a company that's been burning through cash at an incredible rate over the last few years. They've started to stabilize things in the last couple quarters. The 2 straight profits are significant. But with the need to get the price of the Model 3 down to the $35,000 mark that they've always promised, they need to actually cut the costs pretty considerably. That's why they're slashing the jobs throughout the global workforce. And so, they have to manage those carefully while also expanding, because they have to expand production in China, and at some point soon they're also going to start making the next vehicle, and they're saying that may happen at their battery factory in Nevada.
Is that the Model Y crossover, or is it something else?
Yeah, that's the Model Y crossover, which is the next electric vehicle that we should expect from Tesla. It's based on the same platform as the Model 3 car that they're making right now. And so that should help with the cost, so they don't have to reinvent the wheel, and they can, really bet on the engineering that they've already done. But, Tesla says they've learned from the Model 3, and they'll incorporate those learnings in the manufacturing of the Model Y.
And as we wrap this up, Nathan, let's talk about the cash situation at Tesla. They ended the quarter with $3.7 billion cash. As our Charlie Gasparino reported last week, Tesla does have enough cash to pay down their debt and make that $920 million debt payment that is due. But are you concerned that they'll have enough cash to fund their future growth? And are investors concerned about that?
It's good that they have enough money to make this payment in a few weeks, because that was significant. A few months ago, it was a little bit unclear. But going forward, they really can't miss a step, because they have every quarter they're spending so much money that they have to keep sales rising. They're saying sales could go up by about 50% this year. So if that happens, then we'll probably see the kind of cash flow they need to pay the bills, but they really can't miss a beat.
All right. And that's a big jump of deliveries, 50%. Nathan, thank you so much for joining us.
Thank you.